when everyone does what's in their economic interest and takes that one step forward, you reach this situation where everyone's just like extracting. You didn't really have a chance to step back and say like, well, how could we make the system better, and how could we make it like richer for kind of everyone involved? And that's what we've had a chance to do through this process of Blockspace futures. And so I could take this 12 seconds, I could cut it up into 240 pieces of 50 milliseconds, and poof, like now we basically have we can almost call them synthetic blocks or miniature blocks of 50 milliseconds instead of 12 seconds. And so that's the beauty of it. And so instead of trading or transacting once every 12 seconds, now you can actually trade multiple times at different prices and get guaranteed that these are all going to go through in the next slot. And so it's an incredible development from a UX perspective. And as I said earlier, it impacts the entire ecosystem.
Welcome to the Edge Podcast. I'm DeFi Dad. Today's show features Kevin Lepsoe, the founder of ETHGAS, whose team is pioneering Ethereum block-space markets to power an instant and gasless Ethereum. Kevin, thanks for joining us. How are you doing?
Thanks for having me. Super excited to be on it, and I appreciate you guys, putting this together at this time of the year.
We appreciate you joining us at, I believe, 1 o'clock in the morning your time. So very dedicated to doing this interview with us. There's a lot about ETHGAS that drew our attention. One of those is a real-time Ethereum, real-time instant transactions, 50 millisecond block times. These are fantasies that we've talked about for many years in Ethereum. We'd love to get there. I just thought this was going to take us at least 10 plus years to do so. A gasless Ethereum experience as well. And then there's this idea of block-space futures trading, and this is all a part of what makes this possible. Let's start with more about your background, though, Kevin. Tell us about all the things you've worked on over the years. How did your career in finance ultimately lead to ETHGAS?
Yeah. So first off, I have kind of the pleasure, perhaps, of having two different types of professional backgrounds. In the first 12 years, I was in TradFi. I started as a FX option trader. I got into interest rate, vol trading across a variety of instruments, then got into exotics. That was with Barclays and then Morgan Stanley. And then the last 6 years of my banking life, I was leading financial engineering with Morgan Stanley there. I had the pleasure of working kind of post GFC. So I got to see the world as it was highly levered, as it was kind of like torn apart in kind of the Lehman Brothers crisis, and then how we had to kind of like reconstruct it within the conventional kind of TradFi rails. And so, I'm from Vancouver originally, and maybe it's idealistic perhaps, but I guess I didn't know what I was getting into in terms of finance. And so kind of to see like the very fabric of the financial system be kind of torn apart and, have to put it back together, that really kind of opened my eyes. And at the same rate, I was like, I want none of this anymore. And so I left finance. I then started a company with my wife. So I started an enterprise SaaS company. It's a enterprise cloud company. Won't get too deep into it, but it's basically a low latency cloud infrastructure company. But in that journey from TradFi into TradFi into basically like Web 2 at the time, I got to touch kind of the finance part, the Web 2 tech part, and observing basically the crypto ecosystem like grow and explore and trying to hold back from getting into it. I've just had a number of ideas over all the years, and DeFi summer came along, and at one point I was like, well, if Ethereum is really going to take over the financial system, there's a lot of things that have to be changed. We need to do a lot of work on the plumbing. We need to set it up for like real institutional growth, not just kind of like betting and kind of like this high velocity trading. There's a lot more to finance than the stock market equivalent. And so let's go get into this. And so, a couple of years ago, it was like, let's go do this. And that's kind of when ETHGAS was born.
Before we go any further, let's hear a quick word from our sponsors who make the Edge podcast possible. Sponsors like REDSTONE and TOROS Finance. Grow wealth exponentially. With TOROS leveraged tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With TOROS, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. TOROS reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. TOROS Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge Podcast and Edge Newsletter. Banks use your money to line the pockets of shareholders. Meanwhile, Solstice uses the same yield strategies to line your pockets. Introducing Yield Vault, Solana's best yield. A live delta neutral strategy with positive returns month over month for 3 years. Built for internet capital markets and powered by the stablecoin USX. To learn more, go to solstice.finance. Neutral is the next generation of crypto-native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta-neutral strategies to deliver premium, stable returns without taking market direction risk. Neutral is now officially live to mint NUSD and start earning neutral points. Learn more at neutral.fi.
Yeah, so Kevin, we'll get into this a bit more later, but there's aspects of ETHGAS that, almost look like it's a public good. There's aspects that make it maybe clearly not, but I think when you kind of first mentioned this to us and started explaining it to us, I think the idea is so big and so grand that I'm just kind of curious how you decided to set out and tackle this. Like, what was the incentive? And then what was the sort of underlining alignment you felt with Ethereum? Like, hey, this is the best place to direct my time and energy.
Yeah, so good question. There's, I guess about 10 years ago or so, I met Vitalik in Hong Kong, and by all means, we're not good buddies yet. But it was in the very early days, and his vision for Ethereum was, 10, 20 years ahead of like where it was at the time. And so seeing it evolve from that to where it is now, it shows that the leadership within the community is thinking about things in the right way, and they're able to kind of orchestrate and get the community thinking about the serious questions and not the short-term, like, how do we create markets that just don't make sense longer term. And so with the focus on decentralization, that's really like counterparty risk. Like, can I trust this network? And that's just like, you cannot place anything like above that. And so I think that's just critically important. And so with that focus within the community, and combined with the interest from the broader financial community, the broader set of builders, you get all the serious builders, you get the most intellectual developers on Ethereum as well. So it's a mix of the leadership, it's a mix of the core developers, it's a mix of the people adopting it. The most obvious thing is that it's slow. So we'll get into that a little bit later on. But when you combine the seriousness of like what they're building and the scope of it, there's an incredible opportunity here. And so there's a number of people who see this opportunity. Of course, you have like ETHDATs who are saying, I think Ethereum should be 30 times what it is. And so, what are those things that unlock it and make that happen? And so, we're just doing our part to help fulfill that mission.
So let's talk about the elevator pitch behind ETHGAS. What is it? What are you building? And who are your customers?
Yeah, so we are a Blockspace futures initiative. We basically package Blockspace in different ways. We help people provide precision execution. And one of the greatest benefits of what we do is we make Ethereum real-time. And so who are the users? Well, making Ethereum real-time touches literally every single user across the ecosystem, from the everyday person like you and I, and to the dApps, the traders, the searchers, the wallets, the validators, literally everyone. And so those are the set of users that we're impacting.
Kevin, I want to get a bit more into this real-time Ethereum thing. Can you break this down for us, how this is even possible, how this would work? On your website, for example, I'll just read this little snippet. It says, "Our mission at ETHGAS is to advance Ethereum to a real-time network and eliminate gas fees to unlock institutional adoption and onboard the next billion on-chain users." Again, how is this even possible? What's happening under the hood for this real-time Ethereum vision?
Yeah, so there's two parts to this. So when you asked me earlier, like a bit on our elevator pitch, the first part is getting access to Blockspace. So Ethereum has validators. They're the ones who basically every block are like minting, who are printing that next block. And they do this through this certain process. We went to these validators and we said, well, why don't you guys like sell us your block space, or have us intermediate and sell your block space through our marketplace? And that's a novel concept because traditionally you just kind of build these blocks on the fly. Now, when you can get access to block space, it makes you think, well, hey, like what could I do with this block space? I could just kind of build it as I conventionally would or traditionally would. But what if I did something different? What if I pretended that I was like a validator, but instead of running on like a Raspberry Pi in the South Pacific, I had like a supercomputer who would actually not take 12 seconds to build a block, but I would use the supercomputer to basically build like miniature blocks, like 50 milliseconds in length. And so I could take this 12 seconds, I could cut it up into 240 pieces of 50 milliseconds, and poof, like now we basically have, we can almost call them synthetic blocks or miniature blocks of 50 milliseconds instead of 12 seconds. And so that's the beauty of it. And so instead of trading or transacting once every 12 seconds, now you can actually trade multiple times at different prices and get guaranteed that these are all going to go through in the next slot. And so it's an incredible development from a UX perspective. And as I said earlier, it impacts the entire ecosystem.
Can we get right into some examples, Kevin, as someone who would use something like Uniswap to trade or Aave to lend or borrow? Talk to us about an example of what does life look like for us as users doing a swap on Uniswap after this real-time Ethereum is enabled?
Yeah, so the good thing is you don't need to do much. From a end user perspective, the way you would interface with us is just through your wallet or RPC provider. And so basically they would update their RPC to link to us. And basically you'd have these real-time prices basically streaming through the RPC. And so effectively you would just trade like you normally would. Ethereum would just feel faster overnight. And so now it's not affecting 100% of the validators like immediately from the get-go. Today we have just under 5% of the validators who are open and ready to do this. And so we basically flicked the switch on this a few weeks ago. We tested it on mainnet. It worked. It was beautiful. Now we've now turned that off to just consult with the industry to think about like how do we roll this out properly. And so in this place where we are now, it's like, hey, this is going to impact all these different people. How do we kind of get everyone on board? And so, as I mentioned earlier, we have RPC providers who are basically connecting to us to access the real-time feeds. And then there's AMMs like Uniswap, where, I mean, that's the biggest unlock, right? You have the LPs at Uniswap, they make about $1.2 billion, if I'm not mistaken, a year in terms of fees. And when you make Ethereum real time, again, as I said, you could trade multiple times within those blocks. And so as an LP, how much more are you going to make? You're going to make like 2-3 times more on some tokens, but on maybe some altcoins, you might make like 10 times more, right? So it's a huge unlock for a number of people, especially the AMMs like Uniswap. They make probably to the tune of $2-3 billion. almost instantly on a run rate. And separately, you mentioned Aave, and I think it's Aave and Compound, like those guys are less interesting from a dollar perspective, but it's critically interesting from like an event risk perspective. And so what happens is that when the markets are moving very quickly, over 12 seconds, like the market's going to move drastically, of course, right? Now, when liquidations happen on Aave, basically you're stuck for 12 seconds. And so what happens is that like when that, if you've borrowed, you're going to get liquidated and you're going to lose a lot of money on that liquidation. As a protocol like Aave itself, you need to set these conservative thresholds around like leverage ratios because you need to factor in a 12-second block time. But all of a sudden, if we're now having a 50 millisecond block time, then all these liquidations, all this type of gap risk, it happens at the margin. It almost like it just happens when it should happen. It's not after things have really blown up. So long story short is that it basically like reduces this event risk or this gap risk with lending protocols. People will still be liquidated, but it happens like an orderly fashion. There's no like, oh my God, this thing blew up and like look at how much losses there were. It's just like, yeah, it was liquidated at the margin. Someone lost, like 1%. Like, okay. And that's the way it should be, right? But we shouldn't, there shouldn't be this like news of like who extracted the most or who forced the oracle to do something to cause these losses. Like that's just not going to happen.
Okay, I want to go back to that Uniswap example. I feel like you can't unhear that after you hear something like that, but it sounds like you're basically going to materially impact their bottom line. And we'll get to some of the trade-offs and maybe some of the underlying risks here, but I definitely want to linger on this first, because what is Uniswap saying when you come to them and be like, hey, look, we could real-time your protocol right now and make you all and your LPs make a ton more money? I mean, that just sounds like the most win-win scenario. So yeah, are you having in-depth conversations with the Uniswaps of the world or the Aaves?
Yes.
Is that going on behind the scenes right now?
Yes, I won't get into too much details, but the first reaction is just like, I didn't think this was possible. that's probably the first reaction. Generally for all the main large protocols, like they're on L1, and when you think about faster block times, it's like, oh, let's go to some L2 or I get the faster block times there, but at the end of the day, like the liquidity and the money, or at least for the blue chips, it's still on L1 itself, and so it's a bit of this like, I didn't realize that's possible. And when they realize it's possible, it's like, okay, let's unpack this. And yeah, so we're in this exploration where it's like, oh my God, that's possible. There's a lot of research out there to support that, as block times go from 12 seconds down to, like really small, MEV mostly disappears, but then LPs just make a ton more money. So there's a lot of research kind of supporting this. There's also like empirical evidence to say that, hey, you guys make more money. Anyone can run like a historical kind of like analysis to check this out. But now that the theory and the research is clear, it's more the practical implementation. And so like, how do we actually do this? Because, if Uniswap has fees that were tuned for 12-second blocks, those fees should be reduced if we're looking at 50 millisecond blocks, right? So instead of paying like a 10 basis point fee, maybe fees should be 1 basis point. And so, even with that 1 basis point, they would still make more money. And that's the thing, right? So they still make more money. And for everyday people like you and I who are trading, we're paying 1 or 2 basis point transaction fees and not 10. And so it's a win all around. The one caveat, I must say, this isn't just it doesn't mean people will be doing millions of transactions per second. The one outstanding issue, however, is that the block is only so large. You can only get so many trades still physically in that block. But, having gone through the Fusaka recently, and with ZK EVM and a lot of work there coming online, a lot of people predict, next year in 2026, we'll be at, 100, 200, 300 million block space, which is, like 5, 8, 10 times the amount of block space we have now. So the point is, we can allow for 10 times the amount of trading and actually use that 10 times the amount of trading. And so pretty exciting.
So does this mean Uniswap is buying block space from the validators who are selling it on the ETHGAS block space futures market? Is that what needs to happen in order for all of these benefits to become possible for us as users?
Good question. So yes and no. So that's part of the exploration we're going through right now. So right now we have a third party, let's just call it like Kevin or someone within ETHGAS, who's saying, I will buy the block on your behalf. And so Kevin is kind of taking a loss in that process to facilitate this real-time trading. But ultimately, like, who is the beneficiary, right? Like it's Uniswap to a large degree, but it's also not just them, right? There's other AMMs, there's other people that will benefit. And so what we would like to happen is that basically everyone who benefits, there's some proportionate amount of that benefit that's kind of passed back to the validators, who ultimately will sell their Blockspace and enable this to happen. And so it'd be great if Uniswap could pay for this. Again, net still positive to them. But we also don't want Uniswap doing this and then blocking everyone else from doing that. Like that wouldn't be cool if, say, Uniswap did it and they blocked Sushi, for example, from facilitating trades of the block. And so, how do we kind of keep the system open, but at least align incentives, with respect to the net benefit that the protocols enjoy.
Kevin, how does ETHGAS play into the relationship between Ethereum L1 and L2s? Like, how does it play into the scaling roadmap with L2s? The Mantle Global Hackathon is a 3-month competition inviting developers and founders to design and deploy scalable Web3 and RWA products on Mantle's modular Ethereum L2, built for high performance, low fees, and full EVM compatibility. With $150,000 in prizes and a $30,000 grand prize, now is the time to build. Register by December 31st, 2025. Submissions are due by January 15th, 2026. To learn more, go to mantle.to/hackathon/U4U, and don't forget to follow mantle_official on X.
Katana is an opinionated blockchain. Its opinion is that for DeFi adoption, there are 2 key things we need: deep liquidity and high yield.
To learn more, go to katana.network. DECIBEL is the new sound of trading, a fully on-chain trading engine supporting spot markets, perps, and yield to trade global markets. Enjoy trustless execution and sub-penny transaction fees. Join the future of trading at decibel.trade and access the Decibel testnet today.
So there's a couple things, couple angles here. So one is that L2s are fast by their very nature. And so L2s need to roll up to L1 as well. And so when L1 is that much faster, then you can basically roll up to L1 with much more certainty on like the L2 sequencing side of things. So you can basically roll up to the L1 quicker. As a trader, you can now do like L2, L1 arbitrage trades better. And so that's interesting. And so broadly speaking, we support the L2 roadmap. It's easier for basically like smaller validators. This is a bit of a technical nuance, but it's easier for smaller validators to support a big roll-up kind of blob space. But I think where it gets interesting is that if the L1 is that fast, if it's 50 milliseconds, it's actually much faster than many of the L2s. So what does that do to the flow of liquidity in the broader ecosystem? And in that case, I think what we might see is a large like re-centralizing of liquidity, in the sense that liquidity won't be spread across all these L2s all over the place. It'll actually come right back to the L1, where it is most capital efficient and fast. And so it'll be interesting to see how this evolves over the next 24 months. But either way, to the extent that we can make it faster, it's good for everyone, both the L1s and the L2s as well.
Kevin, there's a whole kind of side industry that it sounds like this could be disrupting. You mentioned this eliminates MEV. Can you elaborate just a little bit more on that, how this real-time kind of cuts out the whole MEV component?
Sure. So, effectively, currently, within the block building process, you have a number of players that participate in that. What happens is you have maybe everyday people who put their trades into what's called a public mempool. And then you have other traders or searchers who will basically look at those trades and say, well, hey, if I package those trades in a certain order, I could maybe front run those trades and get a better price on them, or I could front and back run them. So like a bit of a sandwich attack. And so there's these types of trades, basically like conventional MEV, that you could do to kind of trades that you could kind of do within the block. And so that largely disappears. There's also, actually, I'll talk specifically on that. So in respect of that kind of front running and back running or sandwiching, the nuance is that the block time is so fast, you don't have the time to see what else is going through. You just see the price, right? So it's like, with Uniswap, they have this swap interface, right, from one token to another. They should be, and I hope they will, basically change it to like a trading view chart where you have like candlesticks, right? Like that's what they can do on the L1 itself. And so that's what I'm saying. The price moves so fast, it's very difficult to front run someone to get that latency advantage. And that's the bread and butter basically of these HFT or sophisticated traders. Separate to that, there's some other trading in between centralized exchanges and decentralized exchanges, SexDex, ARB, that some people do. Again, you'd have a 12-second advantage to do this in the past or, currently. But with a real-time environment, you don't have 12 seconds. You just need to trade like Uniswap, and Ethereum is just another exchange. It's semi-real-time. And so, again, in that environment, MEV still exists, but it's if I remember, at least theoretically, we basically reduce it by about like 94%. So yes, there's still a smidgen of it left, but we've only been at this real-time stuff for a few months. Give us a few months more, and we'll see how much further we can chip away at it.
I guess just a follow-up to that would be, who's benefiting from the current status quo, the way Ethereum L1 is today, and then who would this be disrupting? I think you've already kind of mentioned some of these block builders, but any more specifics there?
Yeah, on the disruption side, it's searchers, right? Like I have this latency advantage or this informational advantage, and I can see what you're going to do, and I'm going to do it faster and better than you. So that's searchers and certain types of traders. So it's disrupting that type of flow. In terms of the people within the ecosystem, if you're a block builder and your business is facilitating MEV, then that will be difficult within this environment. Again, a block builder, we have this open marketplace to acquire blocks. So a block builder themselves could buy a block within our marketplace, and they could sequence it in real time themselves as well. That's entirely their prerogative, right? But I think the pipeline is in this, like, when everyone does what's in their economic interest and takes that one step forward, you reach this situation where everyone's just like extracting. You didn't really have a chance to step back and say, like, well, how could we make the system better, and how could we make it like richer for kind of everyone involved? And that's what we've had a chance to do through this process of Blockspace futures. And so, we are disrupting the pipeline of the builders' relays, but it's at the same rate they're open to come into the system and make money in new and different ways. So keen to explore that also.
We should also talk about the trade-offs to ETHGAS. So what are those? What are the criticisms that you have received about the design of ETHGAS?
Yeah, so there's a couple, and I think we've addressed them. But let me maybe walk you through some of those. And so when we first started, as I said, we enable people to buy block space, and so currently the pipeline is based on MEV. And we said, well, hey, people could buy multiple blocks. You could buy 2 or 3. Hypothetically, you could buy the next 12 minutes of Ethereum. And in that process, as a searcher or someone trying to extract MEV, you could extract a huge chunk of MEV there. Over 12 minutes, you could effectively block everyone else. Now, that is profitable to the searcher and the trader. It is highly profitable to the validator, so they both love it. But it's bad for the ecosystem, right? Because you basically like censored everyone else and you prevented trades from going through. And so, we're sensitive that if we go down this MEV only path, that's where this may lead. But there's a certain amount of MEV which the industry broadly is comfortable with or is acceptable, but it's not really for us to police. It's really for us to just engage with the community, with the EF, with everyone in the ecosystem to see, like, how should we kind of move it from here? And so it's a bit of a social consensus exercise on that front. On the other side of things, if we move things real time, whether we increase the MEV or reduce it and go real time, both of these basically lead to situations where the validators make more money. And so if a validator is making more money, then more and more and more validators will come into our ecosystem. And the margin is, currently the validators earn about $300 million a year in terms of what we call execution layer rewards, basically like MEV. So they earn about $300 million a year. I've mentioned that the delta to going real time is probably like $2 billion a year. I can't stretch my fingers that much, but it's much, much higher. And so if there's $2 billion on the table, then, then clearly the validators would want to come on board if they can get paid, say, like half of that. And so what happens is that the entire validator set ends up coming on board, but we become that critical point within this pipeline. And so at that juncture, then, do we become too big to fail in some sense, right? And so how do we kind of mitigate our own counterparty risk? Right now we have this 99.99% uptime, but AWS goes down. You've all seen the Cloudflare outages recently, right? And so these things happen, right? And so how do we prevent this from happening? Do we need to set up multiple nodes and have some semi-decentralized nature around what we're doing? What if one node does something wrong, and how do we kind of police these nodes? These are things that we need to address. Granted, these are high quality problems. Having said that, though, today the pipeline is the block building pipeline. It's run by 3-4 actors themselves, and so some of these actors do control 50% of the pipeline. And so from a practical perspective, we see ourselves being able to increase the validator sets up to probably half of the validators coming on board. And in advance of that, we need to have a solution in place, or at least a roadmap in place in terms of how we can mitigate some of these risks. Ultimately, we don't see everything. So a big part of what we do is actually just talking to people in the community and in the ecosystem to see what matters to you, what do you care about, what do you think is a solution, and how do we get around it? Because at the end of the day, I think we all agree that if Ethereum was real time, that would be fantastic for everyone. So let's get going with that first. But again, to that second question, when it becomes something that everyone loves and is using, then how can we quickly address those other issues around the centralization vectors that we have right now, and how can we kind of mitigate some of these risks? So open to discussing these. Yeah.
Kevin, you mentioned something at the beginning of that answer where you said somebody could presumably come in and buy 12 minutes of Ethereum block space. What kind of ballpark would that cost? I have no idea.
Yeah. So it's given where vol and Blockspace is today, it's a few $1,000s. So literally a few $1,000s. Let's say $2,000-$3,000. And if you think about it, how many hundreds of billions of dollars are sitting on Ethereum, right? Hundreds of billions of dollars is sitting on Ethereum. You could control the entire network for 12 minutes, almost 13 minutes, for just a few $1,000s. And so that, one, that doesn't sound right. Two, it means that block space is severely underpriced, or the value of block space is not priced properly. But that's what it's worth today within the current environment. With our real-time initiative, the hope is that the value of that block space goes up. And so instead of that block space being worth, a few $1,000s, it's actually worth 50,000 or 60,000 because people are actually benefiting from it. And so, the goal is ultimately to maximize the value of it from real utility, not from extraction.
Kevin, how do you defend against copycats with this? I guess what's the moat? Is this open source? Is some of this closed source?
As a DeFi investor, I turn to Maple for permissionless institutional quality yield in a single liquid asset backed by over-collateralized loans. Maple's SYRUPUSDC and SYRUPUSDT are now supported as collateral for enhanced yields on major DeFi liquidity hubs such as Pendle, Fluid, Camino, Jupiter, Morpho, and Aave. To learn more about Maple, go to maple.finance. River is building a chain abstraction stablecoin system that connects assets, liquidity, and yield across multiple chains. Season 3 is live. Earn River points by using SAT-USD in DeFi such as Pendle, PancakeSwap, and Uniswap. Stake River points to accumulate more or convert points to River tokens whenever you like. To learn more, go to river.inc. Hey folks, I want to tell you about our sponsor GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to gearbox.fi. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions. With battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs, Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi.
Yeah, so I think there will be copycats. Now, most of what we do is off-chain and closed source. There are some components that are open source, but those are more like integration components. The element that helps us build and defend our moat is basically around, I'd say, it sounds cheesy to say it, but like intellectual thought leadership. It's really like, this is the idea that we went out and we said like, hey, validators, we could make you a lot more money through enabling people to extract more MEV, or we can make you a lot more money by making Ethereum real time. The choice is yours, right? And so in that discussion, it's basically like building this trust and this dialogue with the validators. And so, they trust that we have their back. We're trying to do the right thing, not just economically, but, like with the right approach, like engaging the community and hosting events and having a dialogue. And so I think that is our moat. And so if someone came into this space with, 10 times the money and they're willing to just like pay their way into this marketplace, they would need to functionally like be 10 times better, 10 times better looking or whatever it might be. You know what I mean? Like they need to just like, it just has to be that much better for the validators to say like, wow, like we thought ETHGAS was incredible, but this is like extra incredible. So I'd say that's really the moat. You couldn't come into this space, at least at this point, and be 5 or 10% better. We have a big, advantage kind of being in market already.
Okay, so when I use Ethereum, I don't have to trust Ethereum. I can trust in the economics of block production. I can trust in proof of stake. I trust in the incentives to drive all the different actors to make it possible for me to continue to have access to my digital property on the Ethereum network and L2s. Can we get to a place where what you're doing with ETHGAS is trustless in the same way? Is there a path to decentralization that allows us to use ETHGAS and use a real-time Ethereum that is, again, as uncensorable as Ethereum L1?
I hope so. I wouldn't say all of what we're doing can be completely decentralized, but the point is that like everything we're doing right now is off-chain. We're basically telegraphing like, hey, Ethereum, 10, 20 years from now, like we want to get there as a community, but right now we need to use off-chain to kind of like get that user experience today. And so like that's what we're doing. I hope that over time parts of what we do are eventually taken in protocol. And so that would be great, right? And over this time, we would need to innovate and find that next opportunity, but that's fine, right? But in the meantime, can we fully decentralize? Not really, right? Because we're off-chain. Like the advantage that we bring is being low latency and having high compute. And so what we could do, though, is have this kind of like federated or kind of limited model where maybe there's, 5 or 6 different nodes where what's the likelihood that all of these nodes are down at the same time? And statistically, like one in never say never, but 1 in a million or 1 in 10 million perhaps. But I think we can get to there reasonably soon. Give us probably like a year. We've already started kind of doing some pilot projects in that area.
Kevin, just curious, maybe how big this space that you're in and that I think you sort of own yourself right now, how big could it be? Maybe like how much revenue potential is here? And then how does ETHGAS even monetize itself? Like how would you currently go about making money?
Yeah, good question. So there's it's very big. So if you think about it, there's let's take the real-time initiative, right? So if we unlock $3 billion for Uniswap almost like overnight, what's our share in that? It's like, could we go 50-50? We need to share some with the validators. But, if this is across like 100% of the market, we could be pulling in $1 billion of revenue, right? That's right up there with what, like Hyperliquid is doing today, for example, right? So it is this like unlock, like how much is real-time value to the broader community? And broadly, we would make fees in that respect. Separate to that, we would charge just on like Blockspace trading. And so if, you're buying it and selling it, and it trades back and forth, we make trading fees just on the Blockspace markets themselves. But again, if you just simplify it and look at the real-time initiative, there's $1 billion on the table once this is fully rolled out. And it's, in my mind, it's math and a bit of implementation work. It's not that difficult. It's not going to happen overnight. I'm not going to promise you that. It takes a bit of time, but it's if everyone is rational, this will just happen.
Going back to some of what we've discussed in terms of the role of Ethereum validators and how they will engage with ETHGAS, I'm wondering, will Ethereum validators, if they have to choose between supporting MEV and supporting a real-time Ethereum without MEV, how does that play out?
Ooh, we'll see. So that's a good question. Now, the validators traditionally have really only had one choice, and it was just kind of accept blocks that were constructed, with MEV in mind. And now they have a choice, I guess, right? Like they can say, I want to build. I want to support kind of blocks that facilitate MEV, or I want to support blocks that reduce or eliminate MEV and make Ethereum real time. And so, with some of the validators we're working with, it's a bit of a it's not an existential crisis, right? But it's just like they've never had this choice before, and so it's something we need to work with the industry around, because I think people ultimately will want the non-MEV block space. But economically, it has to make sense, right? You can't just say like, oh, of course I want to support like no MEV, but because, if they're going to lose money in the meantime, like that's not going to make sense. And so that's a challenge for us, right? How can we enable this real-time environment, but kind of phase it in a way where perhaps the returns are the same as the status quo, or maybe the returns are even lower, but they're willing to take that hit because they believe in the long-term vision. And it depends. But, we are fortunate to have surrounded ourselves with some validators, some of which have said, we're able to take like far reduced, if not like zero kind of rewards just to support this real-time trading environment. And, that's the spirit and the ethos of why I'm in Ethereum, because, there's a lot of people who, on the one hand, day to day, you get caught up in like, I'm here to make money and do my job, but then there's this higher principle that we hold ourselves to. And so, there's a sufficient number of validators who would support the real time, whether or not it made sense economically and, at varying levels of impact. My goal is to make that positive on day one. And I think we're almost there.
So where is the rollout with all of this? Like what's the roadmap look like for ETHGAS? What's out now, and then what's coming and sort of when, if you can fill in those gaps?
Yeah, so Blockspace futures, buy, sell, trade, Blockspace, secure your space in a block. That's all live. And so we have a full set of documentation if anyone's interested in that for traders, wallets, or dApps or protocols themselves. on the real-time initiative. So we shipped that to mainnet in a real production environment a few weeks ago. Now we're chatting with some traders and RPC providers to basically facilitate that and go live with something in January. We'll see where that gets us. Broadly speaking, in terms of block space that will be flowing through our network, I'm hopeful that we get to 20, 30, 40% by the end of next year. Some of that is perhaps ideological or economic in terms of like why people would join. But if it's ignoring the real-time initiative, we will get to 20, 30% irrespective. I think if that real-time we can really kick off with the right partners, with the right people, I think we all need to kind of like shout from the mountains at the same time and like make it happen. And if we do that, then by the end of the year, we're 50, 60% plus in terms of making this happen. And this is the most radical change, radical user experience change to Ethereum over the last 5-6 years. And that would be incredible if we could pull that off in 2026.
Kevin, one of the early partners you mentioned is ETHER.fi. Our understanding is that a fairly large portion of the real yield behind ETH comes from the work that they're doing with ETHGAS. So what can you tell us about how is ETHER.fi benefiting from using ETHGAS with what's already live?
Sure. So ETHER.fi has been a great partner since the earlier days, and they've seen kind of the longer-term vision around what we're doing. Basically, ETHER.fi, and I don't pretend to know their business inside out, but they source, the returns come from multiple places. It comes from running like ETH validators, kind of like under the hood. And on top of that, it's from ABSs. And I'm sure there's some other ways that they accrue rewards, but it's at the most infrastructure layer of what ETHER.fi runs, it's basically just ETH validators. And so many of those are, those blocks and those validator nodes are coming through our marketplace. And so within that, they're already earning, a few basis points above the status quo. And so, yeah, we power a large number of their validators. Same thing with Kraken as well. Same thing with, Blockdaemon, and there's probably a dozen other validators and node operators that we work with.
Kevin, something I meant to ask earlier, and I totally forgot just kind of in the flow of the conversation, but curious just what the Ethereum Foundation thinks of all this. The EF is, have you been working with them closely? Do they know about this? Like, what's the feedback you're getting? Are they terrified? Are they excited?
Yeah, so they know. So we've been working close with, so Justin Drake, 2 years ago, kind of give or take, he kicked off this group or community to talk about sequencing and basically like how do you get like a healthier pipeline within Ethereum. And so I've been a part of that community, and since at least like a year and a half ago, or a year ago till now, basically every ETHCC, ETH Denver, DevCon, DevConnect, we're hosting workshops and groups with various players within the pipeline and the Ethereum Foundation themselves. So everything we're doing is, as much as we're closed source, a lot of the actions we take and the dialogue, it's all within kind of that open domain within that community. And so, they know what we're doing. Again, there's pros and cons, but the most important part, I think that from our discussions with them, is that we're putting pressure into the space. And, if like it's rare that you can actually apply this much potentially economic pressure into the space to see how things might evolve. And they're excited to see kind of like where this goes. And I hope that I can, maintain their trust and maintain that openness. And so I hope to continue this dialogue at future conferences as well.
So exciting. Well, guys, I think this is a great place for us to start to wrap up. So first, I want to remind our listeners that they can learn more about ETHGAS by going to ethgas.com. They should follow ETHGAS Official on Twitter. Follow Lepsoe, Lepsoe. That's Kevin's personal handle. And then, Kevin, thank you for joining us so late your time. Listeners might not, be aware, but you did this interview with us, I believe, at 1 or 2 a.m. Your time while you're on a family trip. So just thanks so much for making it possible. And then, of course, we want to give you the final word.
Yeah, thank you so much for having me. This has been fantastic. I think if there's if there's one final word, it's that like, there's this like believe in something kind of like narrative that's going around on Twitter. And I think like, as I said earlier, there's a bunch of ETH maxis out there, and you have all these DATs, and they're saying like, oh, ETH should be like 60,000 versus where it is now, right? But like, how does it get there? And like, what are the big unlocks? And I truly believe like a real-time Ethereum, it changes the entire landscape, right? Like, you have the largest, most decentralized blockchain with the most TVL that's now 8 times faster than some of the other leading ones like Solana and Monad, right? So like, how do you compete with that? Like, I don't know, right? And so it just becomes so powerful. And so that, similar to this vision of like, 10 years from now, we think Ethereum will be real time. It's like, well, we can make that happen today. 10 years from now, we think Ethereum will be $60,000. But like, what can happen if we make it real time like today? And so like, I'm excited by that. And I think if you guys are excited by that, come join us on this journey. It'll be fantastic. So, thank you again for having me. And I look forward to doing this again once we're, 30-40% of the block space coming through us.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.